Today's date, 10/26/2014, 8:07 a.m. Pacific Standard Time. We have a Dow chart in front of us called the Dow 30. Okay, and what we're going to basically show is what stock market funding was talking about. And what were we talking about? We were talking about the Dow, S&P, NASDAQ Comp, and NASDAQ 100 were overbought, extensively overbought, going into a calendar new year. So the Dow dropped on a Friday of all days 318 points. So we are in the earnings season in this wonderful January period of 2014, and we had some earnings that came out. They were not very favorable. However, we have a new FOMC chairlady that's going to be doing the first monetary policy interest rates in this week. We're going to have a lot of companies coming out this week, and what we're going to say was the following. We're just going to take a look at this trend line right here and what that means. We also are going to talk about the 50-day simple moving average. Now, let us not forget that 2013 was a wonderful year, and the stocks have, in our view, overshot their values, meaning that this market is very expensive, no matter which part of the market you're looking at. So we're going to come to a major support level. That 50-day simple moving average was 16,154. That's the white line. And we're just going to show here once again, stock market funding has called a lot of reversals when they're going to happen before the fact. One of these was the following. We had a major consolidation up here. We broke it, then we rallied back, and the high was lower than the previous high right here. So let's just blow this part up so you can see what we're talking about. So basically what happened here is that when we were consolidating this narrow range pattern called a rectangular type of consolidation, you can see the days over here. You can also see where it dipped down once. So let's draw a trend line right there. And then we came back up. But notice that the 4-day consolidation, and starting with the 5th day reversal, even though it was light, we had another good down day. Either you were going to break out and go higher, or you're going to break down and go lower. So you have the 40-day simple moving average, you have a 10-day, you have a 20-day. The 10 is crossed over the 20. And then, of course, the 50-day simple moving average at 16,154. And we broke that very clean. The next level of support is going to be right around 15,745 at the 100-day simple moving average. We would like to bring to your attention, if you want to go back in time and look at our analysis on the Dow Jones, you can. And all you have to do is, if you don't find it here, you can simply type in the Dow Jones right here in the search box and click go. There you're going to find out everything you need. Now, if you're looking for a free trial, click on the free trial tab. Open an account. Click on open an account tab. Okay? And what will happen is, open an account here. Open the account. Watch the videos. There's a lot of benefits to you, such as what? One of the major benefits is trading capital. So if you need trading capital to get involved and get started, well, read what's here on the content. Have a $5,000 account. We're going to give you $50,000 intraday. Okay? People that have the pattern day trading rule, they know what that is. You're restricted to cash. You can only make 3 intraday trades, period. If you're looking for a great application, we're direct to the floor. We know you applications that you're using on these discount online brokers, you don't have the features for routing orders. It's a crummy thing. So put all the negatives behind you and get started here today and get the positive things working for you. So back to the Dow. That's going to be the 50-day simple moving average. This is where that breakout had occurred in the latter part of 2013. At that point in time, we were on the lows there at 15,750, and we're definitely heading in that direction right now. Here we have is that monthly reversal. We know how that last breakout in 213. Now, this value is greater in the reversal than the previous month up. One of the other things is that these markets have rallied back in 2009, and that yes, this is where the bull started, and the bull will have its 5-year anniversary coming up soon. So, basically what we have here is that we had a good correction in other periods of time. When you look back over here, the 2012 was a 5-month correction. We're long overdue. Not only that, we're deep into this Dow, and the bull history started back in when we had monetary policies with the Federal Reserves printing money, low interest rate for housing, cars are being sold, everything. The TARP was there. Everything has come up in value. And what we're saying is 2014 is a different year. And you're going to have your bull moves, and you're also going to have your bear reversal moves. Okay? And then the seasonality will come in there. Right now, we're in major earnings with the bigger reversal starting the month of January. And let it be known, MMTs, let this be known. Let's go back right here and let's take a look. January of 08, we went straight down. We rallied up in 2010. The January effect was a positive narrow range 3-day up move. So, but we still had that pullback, and it was only a 2-month pullback at that time. The bull was just beginning to get ready to run. Now, in 2011, because we were overbought, and we did have a 5-month correction there. So, when we take a look at how we started out 2012, this thing took off running and never looked back. And that's what this month of this calendar month was about. You can see right here, we only had, in calendar 2013, we got 1 month of profit taking. And we had a very narrow range, and we were testing. The red line is the 20-month moving average. The 10-month was rising, and this bull was on fire. And the bull will return because there's a lot of money on the sideline. So it's going to be a stock picker's market, I can tell you that. And we're in the first quarterly earnings of the new calendar year of January 2014. And today is the 26th. So when we are selling to this magnitude, so goes January, so goes rest of the year.